Well, good day, traders. From wherever you are joining us, it's been a pretty uneventful morning. Our first start, Asian session and UK markets. And it's been a pretty quiet morning so far. Asian session and the European UK session. We're still, of course, in the latter part, probably the start of the middle session of the UK session. I mean, after yesterday's dramatic sell-off, on the news announcements, market is kind of quiet. It may be waiting for another catalyst in the news that's coming up in 2 hours' time, so it's possible that you're waiting for that. Let's have a look at where we're at and what I am anticipating. Then we can talk about some of the trades yesterday. One of those rare occasions which I speak about, that whenever we have news coming, red news coming, unless you are actively in a trade, I always recommend that 30 minutes before red news announcements, you're out of the market. If you have one red news announcement, it's just a multiplication factor. If you have two red news announcements at the same time, be out an hour before. If you have four, and you've had some of those days when it's like 4 news announcements all at once, then be out of the market in at least 2 hours before, because things tend to get choppy. But if you are in the market and if you are willing to rely on your stop and be comfortable if your stop gets hit, then stay in the market. So, and I don't do that often, very rarely, but I did yesterday on a euro versus dollar trade and was rewarded quite handsomely. So we'll talk about that shortly. At the present moment, S&P 500, just start off there. So these are the markets for indexes that we trade in: S&P, UK 100, Hang Seng 50, German 30. 3 currencies: euro versus the dollar, pound versus the dollar, and Aussie yen and gold. I dropped off from the charts that I was trading in the past few months. So Euro stock 50 is gone, France 40 is gone, Nikkei 225 is gone. So it's Aussie 200, simply because I never took any trades for months on end. Actively trading German 30, I found some fair correlation between that and the Euro stock 50. So no need to keep those in there. So I bought high volume currencies back in place and gold, and got rewarded quite nicely yesterday. Presently, S&P 500, I think there's an opportunity to sell, but it has to set out for us. So right from the open of the day, bears try to sell off. Bear candle, first candle, very good for the bears, but immediately followed by a bull candle. So that kind of indicates expecting trading range price action. Bulls in the market, bears in the market. Double bottom for the bulls, double top for the bears, failed breakout, another failed breakout, and now we're getting lower highs. Still nothing in here that encourages me to jump in and sell, although I'm actively looking for the sell opportunity in terms of the S&P 500. What would convince me to sell? I just need to see a couple of strong bear candles. I mean, if you look at this whole price action, a couple of candles at the moving average, pause. A couple of candles, and now, there's another one here. I want to see what happens. I need to see, strong bear candles, 1 or 2, clearing price action, pull back, lower high, and then you can need to take that. UK 100, I mean, clearly evident since the open. We've stayed just within a very small range. I mean, small range compared to what we had yesterday, but still talking for about 30, 40 bucks. So, if this was the only price action without this huge sell-off from yesterday, still reasonable sized. Low of yesterday, attempt by the bears to break out, failed, that candle. Follow through, failed, 2-bar reversal. Then we had a double bottom here, high low double bottom, good acceleration of that by the bulls, failed to create a double top. Then we had a wedge bottom, lower low double bottom. And at this point, when we're in this earlier session, what I was looking for was acceleration up by the bulls. After this candle, dodgy sideways price action, higher low. So nothing concrete for us to trade long or short. What we need to see is a really strong breakout by either side. The bears are going to break out, and there's our present low of the day. So that's the present low of the day. If the bears are going to take control of the market, we need not just a strong beneath the low of yesterday, that to be a first sign of strength, but we already poke beneath it, and poke beneath, we need a strong breakout and follow through. Breakout candle and follow through. That's what we're looking for. And if we get that, then the bears are taking control, look for the pullback and sell. If we don't get that, if the bears are not strong, then the bulls want to just create a high low double bottom after this lower low double bottom. But need a strong reversal candle. And again, because of the sideways price action, I need to see strength of that pullback, and we can look to go long. But of course, all of this takes time to unfold, right? So if it's taking time to unfold, we're inching towards the news announcement. We're well within 2 hours to it. So if it takes another 30 minutes, an hour and a half to go, you really have to be cautious. The news may be a non-event after yesterday's catastrophic sell, but again, we might see something dramatic happen. We don't know which way it's going to go, but rather be cautious. I'm interested to see where this closes in the next minute. Let's just give it a few minutes and see. You're nothing much on. You're not going to trade anything here. You want to be selling up here. You're going to be buying down here, preferably down here. That's S&P 500 while we wait for the next 30 seconds to see. With some dramatic closes earlier on, when we were in the open of this present UK market. And we're saying, let's watch this candle and see whether it closes near on its side. Literally in the last second, the candle just collapses and becomes a doji. So we really need to be patient just to wait. So 4 seconds to go. It was a doji a few seconds ago. Okay, so it's a bear candle, but this is as minuscule of a breakout as we can get. We need a proper breakout candle, breaking out beneath these lows that we have. These lows are significant because out of that came this bull candle. Close beneath here, then we need to close beneath here, and then we need to follow through and then pull back. Otherwise, you can just expect the trading range behavior to carry on. Hang Seng 50 probably ranks quite up there as my favorite pair to trade. So I'm always happy to trade this market. Today, we didn't get much, we didn't get anything at all, actually, when you're watching this on the Wednesdays of the market in Asian session. Good opening candle by the bulls, but then failed breakout reversal, and we just went into a trading range at the low of yesterday. I'm going to put all of these up on the daily time frame shortly, and you'll be able to see just what the market is doing. And we can talk about some areas where I think the market is likely to go the higher probability. We said at the beginning of the month and a couple of times that the bears are likely to control the market. They have the higher probability of controlling the market. And that is what has been happening. So if you've been able to anticipate that, you're able to make reasonable returns so far. So again, tight trading range at the low of yesterday. You just have to wait when you see there's nothing more to do. German 30, bang back in the middle of this trading range. Breakout is followed through from the sell-off last end of the year session. Now, bear breakouts, tail at the bottom, followed through, very weak, reversed. So that's a failed breakout, but it's a double bottom. Then the bulls created a higher low double bottom here. Good acceleration up. When I see that, I was just waiting to get a pullback of sorts that I could trade, but I didn't get the pullback. Got a doji right here, and that's a low probability trade. So you could have taken that, but you had to be quick to get out and manage yourself a loss. But I don't like doji trading range pullbacks. If it had been a low test candle, would have been a higher probability trade. Look to take that kind of trade. But anyway, we're back within the trading range off a double top here. That's the present high of the day. The midpoint, just to avoid confusion, the midpoint of yesterday's here. So all of this area is area that the bears will defend quite aggressively. Let's look at gold, then we'll come back to the currencies. Gold, double top, been created. There's a wedge there, 3 push button, 3 attempts to market go up to a certain level. So and at the wedge top, tight trading range. So within here, market is going to go up once, twice, 3 times, 4 times. So it's also a little small wedge within there. Bulls are failing to break above that level. That's 1705 kind of level. They're failing to break out above that. The double top at the same level. And this is okay for the bears. It's not the strongest breakout, but an inside candle. At least they've closed beneath the moving averages. So you've got to keep watching this and see if we get a decent enough lower high opportunity to go short. If you're taking that trade, if you're taking a first reversal trade, you always have to put in a measured move stop. Because if you don't do that, if you look at enough charts, you realize taking a first reversal trade, the market may want to put up just another move. And you don't want to get stopped unnecessarily. So, you put a measured move stop. And when you get the breakout and the pullback and the low high, then you can tighten your stop. And when you do that, of course, you kind of assuming, the measured move 1-to-1 is down here. So you easily make a 1-to-1 because your trade would have been somewhere, breakout pullback somewhere within here. So nothing wrong with the measured move stop. You should get a 1-to-1 if it sets up nicely for you. It's a bit of a problem for the bears. If they're strong and you have failed breakout, then at least what you want to do is close beneath the pattern. Now you create a micro double bottom here. You've got to ask the question, why are the bears not able to close down here? Okay, so we need a little bit more price action before we can go any further. currencies, euro, failed breakout here. A higher low was created. I mean, failed breakout, pullback, a higher low. I mean, very, very difficult trade to have taken. I mean, taking it to the right, the moving averages looks good afterwards, but that's not a trade you want to take. Because out of 100 trades, or even of 10 trades like this, chances are you will get stopped out. So you want to wait for greater probability in order to take the trades. And as it starts to go up, you get into the top of the formation of the trading range. Then we come down again, we create a higher low. At this point, we observe this at the open of the markets, and we're saying, well, this is good open of the UK session. Let's see a follow through, and because the follow through, then trading range, fair breakout, bear candles, didn't get a higher low. Usually this would have given us, higher probability case, given us a nice, decent enough pullback, and that would have been a nice trade to take with stop down here. I don't like taking trades off a bear candle, closing on the body beneath the trading range, because more often than not, you just get stopped out and rather wait. So the next trade opportunity was up here. That's a trade you could have taken if you're prepared to take that trade. But if you're taking that trade, because in the middle of the trading range, your stop is down here. So it just makes the one-to-one minimum very risky. So best to let it go. So still, again, I mean, if you ever look at the euro versus the dollar, we have some levels up here. That's 50% midpoint of the range of yesterday. So the bears are defending all these areas. So it's still in a sell zone. So I'm pretty bearish as far as this, I'm bearish for all the markets, but I need to see the setup. So I'd rather just wait and see if we get it. What would I be looking for in terms of the euro? Again, if it sets up well clear of the news, I would take that trade. It's a close beneath the moving averages, ascending moving averages base strength. When they close beneath the moving averages, then they pull back, and I'm prepared to go short. I will come back when you look at the daily to talk about the euro and the trade of yesterday, but let's just continue to have a look. We've got a minute to go. We'll come back and look at euro again just now. GBP cable versus the dollar. Again, kind of same kind of thing. Higher low double bottoms. A failed breakout. Here's a decent enough lower low double bottom. This low is lower than that. This low is lower than that. This low is lower than that. So lower double bottom. Went sideways beneath the moving average. Huge bull candle. Reversing the price actions of about 6 candles. So good for the bulls. Good follow through. So a good breakout for the bulls. Breakout above this trading range, which was a breakout pattern on its own, inside candle, outside candle breakout, good for the bulls. So in terms of taking a trade, because of the, let me just open this up. This is quite interesting. So unlike all the other patterns we've seen, okay, higher low, higher low. I think we saw higher low, higher low. Yeah, that was something else could have looked at. Higher low. Unlike those patterns, this pattern that we had here is a distinct breakout mode pattern. Now, why is it breakout mode? Because when you see an inside candle inside another candle, you know market will break out. We're not going to continue just to make inside candles. Then when you see another inside candle, inside this inside candle, it's inside another inside candle. That's breakout mode. When you see that breakout mode, you want to look for the attempt to break out, which we got, either going up or going down, a failed breakout. So the doji was a failed breakout up and above. Outside candle, it's another breakout mode itself. Then we have the bull breakout. Okay, so the breakout, failed breakout, then we have confirmation of a new breakout and follow through. Now, that's a trade, that's a pattern that is good enough for us to look at for an opportunity to jump in and trade. And all we're waiting for after we've seen this, before all of this is formed, is any form of a decent enough pullback without a reversal pattern. Unfortunately, what we got with all of this, that's a good signal for bears, a reversal candle. Okay, a bear high test, strong candle, follow through, doji at the EMAs, bull breakout, failed breakout, then get a doji. In here, we didn't get a decent enough setup that gives higher probability to trade. Now, still coming off this, accepting that we don't have a high probability trade, if you're willing to take the trade, and this is one of the trades that I would consider trading, but only if I bank some profits already during the day. So if I bank some profit in the day, it's a low probability trade because of this failed pattern here, of this strong bear reversal pattern that failed. But when I look at the bull candle, I don't have a bull reversal pattern that I can trade. What I have is a doji candle. If it had been a bull candle, different story. It's a doji bear candle. But coming off this pattern, and you can say, well, let me look at, I can take that trade. You take it with a fraction of your original risk, usually like I go in at 0.25% of the risk. Low probability trade because it's a bear candle. But if you bank cash, you can take low probability trade in any case. 0.25 of your risk. Not only is the low probability trade, all of this hasn't happened. So you're only going as far as that. That was the high of the day at that stage. So low probability trade, stop down here. And you say, well, if the bulls are strong and they surprise us, they might go, I might be able to get my 1-to-1. So if you take that trade, and your stop is down here, then your 1-to-1 will be there. You will be able to get that. But you have to bear in mind it's a low probability trade. And the only reason you should be considering taking a low probability trade, especially or because of all the structures, is if you've banked some cash earlier on, so that if you get stopped out, you're not starting off your session in a negative. So that will affect your trading for the rest of the day. So that's a trade you take for that reason. And you get to here, you get a pullback, and when you see that, you're not surprised because it might just reverse, low probability trade, and you should be able to get out, break even. But as it was, market turned, so you could touch your stop to here or take out your profit at 1-to-1. But that's a low probability trade. It's important to pay. And the reason it's low probability trade is what happened in the bears here, and the failure for us to get a decent enough reversal candle. So again, market is kind of going up, excuse me. Market is going up, but in the manner that it's going up in, it's not a strong bull breakout. This looks more like a bull leg in what could be a trading range. So I'm still quite bearish with the market, hoping to see any kind of option for us to sell. Probably maybe before the news. If not, wait to see what happens with the news. I mean, the timing of the news is pretty perfect. 4:30. Well, it's 30 minutes before the open of the US markets. So whatever move you have may be confirmed or disconfirmed in the open. So you might get a strong move that may give us an opportunity to trade and break out of this trading range that we've been getting. Aussie yen, for those who managed to jump into it, I didn't. It sold off quite well. You know, right from the trading range in the Asian session, first part of it. Strong candle, bear candle right from the open. That's good. But inside candle, trading range price action, got to the measured move of the first candle. So we had a very poor breakout above the high of the first candle. But we got to the measured move of that. So when you see a first candle, you know, it's always good to mark the measured move of it, because market might test that, and ended up creating a lower high. And when you looked at the lower high, you know, only area for you to have jumped in would have been here, because this was still setting up. But if you took that, then you'll be prepared to put your stop here. Hopefully get, or not hopefully get there. You would have gotten, I think, yeah, you would have been taking a chance on getting just less than 1-to-1 before you get to this level of support. Okay, because when it bounces off like that, you know, it's very hard to hold on, because the market might accelerate up. So you take your profits at 1-to-1 or just less than 1-to-1. Then we had another breakout. So we had a breakout below low yesterday, failed. Breakout failed. Trading range beneath the low of yesterday. We wait to see if we get a breakout. We then got the breakout and failed to break above, break below. This was a high of 2022. So when you look at the daily, we see that. So now we have a new high, which is up here. This was the old high of 2022. So we're breaking back into the 2022 range. No opportunities for you until you got here. So this would have been the next trade to take short. If you're taking that trade short and your stop is just above, there's technical levels, but your stop is to be just above the, and there's lower highs, your stop above the nearest technical level, which is the old high of 2022. And then it's just sold off. Trend reversal at this stage. Bulls looking for a double bottom and maybe buying up back into the, because the bulls still want to keep the market right up back at the old high. So let's start with the daily chart. We have spoken a bit about gold. So, I mean, when we spoke about this in one of the other shows, and I mentioned that whenever you see a breakout, you need to confirm breakout. So we failed here. Strong candle closing above what was the high of 2022. Dodgy. So you expect a failure. We got the failure yesterday. So bears would have been selling beneath that low. And bears, of course, what bears are looking for at the present moment is the market to collapse all the way down here. Bulls are saying, well, okay, we had an attempt to break out, we failed, let's try and create a higher low and, you know, get back above this high that we had. So that was an August high. Let's change that. September 22 at some stage. August high. August 22 high. Look above that and pull back. And broken above it, we've pulled back. We probably won't need it by the end of the day. We'll just leave it in for now. So if we do close below the low of the high of August, then the bears will be celebrating that they've reversed the high, not only the high of the year so far, but the high of August. Then all they want to do is keep on selling off. So it depends how the day ends. We saw that the double bottom potential being created on the 5-minute. That double bottom holds, and the bulls will just buy and try and reverse this and see if we can get back above this old level of resistance. Gold. So huge sell-off, but September so far has been a trading range. Anytime the bulls try to break out above the descending moving average to try and break the strength of the bears, they failed. Bull candle some stage tails on top, tails on top, tails on top, tails on top until we had yesterday's candle. So what is interesting here is that we have this level here, which is marked by this line here. So this light blue line is the low of 2022, and just below it is the low of 2021. So huge level of support by the bulls. That's why the bulls have been keeping the price away from it. So the bears just want one huge candle to collapse the market beneath, this present low of September, low of July, low of 2021. And if they do that and get a close down here and follow through, then the price of gold can expect it to tumble until we get down to those levels, 1543 kind of level. So that's what the bears are looking for. But the bulls are saying, well, we sold off, and after we had these two strong candles breaking off beneath that trading range, went sideways, we reversed the market. 3 strong candles, we've reversed it, trading range. Yes, the bears can try and sell, but we're going to turn this market. So the same vein that the bulls are trying to break out beneath here, the bears are trying to break out beneath here, the bulls are saying, we can just allow them to test that and we'll reverse it. So I'm particularly interested in what's going to happen with gold, because if we get a breakout beneath the low of yesterday, there will be opportunities for us to keep selling, cognizant of the fact that we might get a reversal. If the reversal comes in and we see it on lower time frame, when we trade the reversal, could trade the reversal up. So gold is pretty high on the checklist at the present moment. Cable. This Fibonacci is a 5-minute fib. Okay. Again, so we had this key low here, low of July, and it kind of went sideways for 4 or 5 days before the market broke beneath it. So breakout beneath the low of July. You can see that was a low and tried to close beneath it. Breakout, come to test back here, and you've come back and we've tested it. So as far as the bulls are concerned, bulls are saying, well, we are at the low of a channel, a developing channel, bear channel. So this sideways price action is attempted by the bulls to create a double bottom and reverse the market. And if they can do that, this level that we have is a key level, 1.14. So it's the low of 2020. I think it's probably that March or April COVID low, whatever. That's a key low. So that's been defended. The market has come back to test that. And the bulls, want to reverse it, and they know there's a channel, a bear channel, but at least they can reverse the market here and accelerate all the way up. The bears are saying, well, all we need is strength. whether we go sideways to break beneath this. And if we do break beneath that, then we start to talk about first this measured move down here somewhere. They want to test the 1.1 area. That's where the bid would like to go. They want to build momentum and just sell off and get to 1.1. The bulls will be so glad to go down the bottom and push the market up. Once you get to the channel, you can start to test the channel and then break out and follow through. Now, euro is very interesting. I took a trade here, which I held through the news, which one of those things that I do 5% of the time. But when it turned out well, which was fantastic. So it's a good trade. So what we have is a strong bear channel. This bear channel is started from the beginning of the year and we've got the high of 2022. The euro has been in a bear channel. Everyone can see that in the daily. So when the market gets to the bottom of a channel, you got to try and find ways to buy. Okay, you got to anticipate reversals on the 5-minute and take a trades, etc. So like we got on the cable, that kind of pattern. Okay, while the bears want to push the market, even if it gets down in double bottoms, you can anticipate a reversal. So on the euro, you'd expect the same thing, but now we are at the top of, or yesterday, a couple of days ago, we were at the top of the bear channel. And when you're at the top of a bear channel, you have to expect that the bears will come out to defend the top of that channel. So we had market close near, gapped up, opened up and turned at that channel. So yesterday, looking at market going up to that level, I was looking for reversals, which I was able to jump into. Let's just have a look at that. We'll just have a look at that quickly. Because I think it illustrates a point pretty nice. So there is a channel line, the descending bear channel line. And the market almost like today just didn't give much opportunities to jump into the trade. But as we got to that channel line, I considered as a potential wedge top here, took a trade here underneath this and had a measured move stop. Got market turned. Okay, trade here. The measured move stop for this little trading range. So that was measured move stop. Got stopped out at that level. And then I still, looked at the whole market and I said, well, I know we're going towards news, but the setup is so high probability sell because of this channel. This channel, bear channel, has been going on since the beginning of the bear channel has been going on since the beginning of the year. So I'm expecting that bear channel to hold. So if I'm expecting that to hold, so 2-bar reversal test of the high, and say, well, I'm going to take that trade. So that 2-bar reversal, I try to put a trade in there. Going into the news, measured move stop, happy to be stopped out and got rewarded by that. Now, that's that's the 5% of the times that I take trades, that I stay in trades up to the news. I just want to show something quickly. So this was a little bit higher. So that's, I marked the high of yesterday for today's purposes. So this was the day. So I could say that 2-bar reversal is a failed test of the high of the previous day. So now I'm going to take a trade. And when I took that trade, then my stop was above the technical level that was here. And prepared to get them stopped out if it had happened, but it broke out in the direction. So it was a good reward, but that's not done often. I think the point is emphasizing the power of always starting on the higher time frame to see if there's any levels that we need to take cognizance of. So that bear channel is a key determinant. If I don't get any trades out of the euro, I'm not worried. I'm going to wait to see if we get up here. If we get a setup by the bears, I'm going to see if the bears are strong enough to sell off. There's still room for them to get down to the low of this channel, 0.9 or whatever the case may be in that area. Very quickly, let me just pop up the daily charts for the 4 indexes, so we can just have a quick look at them. In the last minute or so that we have, let's do it, press the magic button. Okay, so as I've been on my bandstand talking about bear price action, market is selling off purely because of price action, and you can see, that's what's been happening in the market. So this bear candle, S&P 500, this bear candle UK 100, bear candle German 30. These are outside candles. Okay, outside candles are trading range candles, which means if we get any breakout, we can expect a failure, but you might get a measured move to the measured move of the trading range of that breakout. So, for example, this is what you ought to do. I suggest to do in each of these. There is a measured move of the candle. If the bears are strong, they want to break out and get to that measured move, but because the trading range, the market might bounce off here. Okay, so you can virtually do that for all of them and see what the potential is. It might go sideways, it doesn't matter, but the potential is there. If the bulls are able to reverse the market, they have to get above this, and they get above this because it's still a trading range. Same thing, all of them, to be a breakout above the trading range. And if we get out above a breakout above the trading range, that's where the market is going to go. So for us 5-minute traders, whether we get a breakout beneath like happening here, or look for a decent enough setup, pull back, we trade it, get a reversal, we trade the reversal all the way up, get a breakout, we trade it up. The one that's different is Hang Seng 50. The reason I say it's different, Hang Seng 50 doesn't necessarily follow because of its 3 distinct openings. When you get to the open of the European markets, UK markets, US markets, you don't get as much dramatic price action as you do at the open of the Hang Seng 50 price. So just bear that in mind. It's still an outside candle, not as dramatic as the others. So do bear that in mind when you look to trade this. Thank you very much, guys. I really appreciate your time. We still have Wednesdays in the market with George. There's the opening of the US markets, and we'll be meeting just after the news announcements that's coming through. So look forward to catching up with everyone then. See you later. Bye-bye. Thank you, Marlon. Appreciate it, man.